If you could have a trading system that gave you the directional bias with this level of accuracy, would that help your trading? Now, I know what you're thinking. If he had a system that accurate, he'd never share that. Well, you're in luck, because today I'm going to show you guys the exact daily bias system that has these statistics. Now, disclaimer, just because there's over 80% chance of the market heading to a specific level, it does not mean you will have an 80% strike rate. You still have to be able to execute. And that's something I'm going to be talking about later in the video. Now again, why am I so confident in this system? Because this is a system that helped me make just under $13,000 in just a few trading days this past week. You guys can see the performance fees from Alpha Capital, as well as the performance rewards from Funding Pips. And if you want to, you can scan this QR code just to verify that this is a real payout. Not only that, but I've had hundreds of thousands of dollars in verifiable payouts. Here's one from FTMO from over 72,000 in terms of profit share, and a bunch of other certificates as well. And these are just a few of them. But the best part of the system, it's replicable. Not only can I make money for myself, but others have been able to implement the same exact strategy to make money. Look at Hamza, for example. He was able to get a payout with Funding Pips. Even Amir, he secured 3 express funded accounts with TopStep. So it doesn't matter which asset class you trade, whether it's Forex, whether it's indices, whether it's crypto, this works on all asset classes. Here's another example of Kieso, who's been through countless courses and has been involved in countless communities, where he was able to get an account with Alpha Capital, a prop firm, as well as securing a first payout, as well as trading 5 Apex funded account towards payout. Again, this works on all asset classes. Or even Augustine here, who just this past month focused on trading one of my systems called the Golden Hour, which will be a separate video, and the EBP, which is the system I'm going to show you guys today. And he has been approved for a payout for $3,500. Now, what is the EBP strategy that has over 80% strike rate? EBP stands for the engulfing bar play. Now, there's 2 things we need for this system. Number 1, we need to understand what exactly is an engulfing bar. And number 2, the power of 3 concept. So we're going to talk about each of those concepts before we get into examples. Now, bullish engulfing. This is a very straightforward definition. All I'm looking for is price to sweep the prior bar candle's low, and we close above the prior candle's opening price. Now, if you guys are familiar with engulfing bars or outside bars, most people will look for the closure above the high. However, for me, all I need is to see price closing above the opening price of the prior candle. It does not need to close above the high, even though in this example it did. Now, bearish engulfing. Price sweeps the prior candle bars high, and we close below the prior candle's opening price. Now, here's an example of what I just was referring to. It does not need to close below this low. Some people have that as a requirement as an engulfing bar or an outside bar. For me, I just need to close below the prior candle's opening price for the bearish side, and on the bullish side, just needs to close above the prior candle's opening. Now, this simple but extremely effective system will give you the directional bias for the next candle or candles. Now, before we get into that, the next concept we need to understand for the system is the power of 3. Some of you guys may be familiar with this concept and some of you guys may not, but I'm going to go ahead and walk you through it. When we talk about the formation of a bearish or a bullish candle, we have this very basic framework. Typically, on a bearish candle, what we're looking for is a candle to open up. We want to see a push higher into some sort of key level, typically, and then the market has some sort of drop lower, right? We form some sort of low, and then we close bearish. Now, at one point during this candle's formation, if this is a daily candle, a 4-hour candle, 1 hour, 1 minute, it doesn't matter, because at one point this candle is actually bullish when it was pushing up. However, that push up is usually some sort of manipulation move to drop to head lower, and then whatever low forms, and we close on the bearish side. Inversely, on a bullish candle, what we have is typically the opening price. We have the drop down first, and then typically price will create a high and then a close. This drop below the open and this rally above the open is what we call power of 3. While the candle is forming, we're looking for the market to have some sort of drop lower in the bullish example to create a bottom wick before heading higher. And inversely on the bearish side, we want to see the market have an opening price rally first to create a top wick, and then we have the market head lower. Now, this is very important because we will use this concept to frame potential trade ideas when we combine the two concepts into the EBP play. Now, there are 2 ways to trade the EBP system, and here's the first one. The method 1, trading the EBP. DOL stands for draw on liquidity. Where is the market headed to next? So with the first model, I'm using this system to help me identify where I'm going to typically enter and where is the market likely to head to next. And for this method, I typically use the monthly time frame, the weekly time frame, and the daily time frame. So these are very specific to method 1. Now, for the sake of time, I will focus on the first method in this video because I don't want this video to be way too long. But if you want the video for the second method, join my public Telegram, link in the description below for when that video upload is going to be ready. And if you're watching this video at a later date, it'll most likely be pinned inside of my Telegram. So make sure to join that. I also have a bunch of free content in there, additional videos, so it's a good place for resources. Now, method number 1, DOL, trading the EBP. Now, right here, we have an example of an engulfing bar. And again, guys, this is what I mean. I just need the bar to close below the opening price if it's a bearish one. It doesn't have to close below the low. And this is just a good example of this right here. Now, with method 1, what I like to use is the engulfing bar candle's low. In this bearish example, is going to be my DOL. So this is typically going to be my objective or target. Now, think about it. What time frames did I tell you guys that I typically use this on? The daily, the weekly, the monthly. Now, if this is a daily bar or a weekly bar, this draw on liquidity can be very, very important because it gives us the framework that this could be our next target. Think of the statistics that we talked about in the beginning, the 88%. On the bearish side, it was around 83%. This is the DOL that this statistics is running through. Now, again, if you guys stay to the end of the video, I'll tell you guys exactly which asset class this pertains to. But the sample size is 471 on the bullish side, and for the bearish side, 83.4% accurate. 488 examples. So, and this is using a daily bias. So that DOL, depending on the asset class, has up to 83.4% of being hit. That gives us a massive edge because we understand we now have a draw on liquidity in price that we can anticipate 83% of the time. So going back to this example, we understand that the DOL on this example is going to have an 83.4% likelihood if it's on a specific asset class. And to be honest, guys, I've tested this on multiple different asset classes. I have a bunch of data, and I'll probably, if you guys want the data, comment data in the comment section. And I'll see if I make a video explaining all the data that I have for every single asset class and its accuracy. However, knowing that this DOL has over an 80% likelihood of getting hit gives us a massive edge. Now, how can we use this to our advantage? What I'm typically looking for is the next candle or the next few candles. Sometimes it won't be the next candle right away. I'm just looking for the candles open, the price to rally first, and then drop into the DOL. Now, again, this is why we use the concept of power of 3, because I need to see the candle opening first, head higher first, and then hit the DOL. If typically price drops lower first, takes out the DOL, in some cases, I'm no longer interested. In some cases, I am. It's going to be dependent more so on the higher time frame, but that will be something that we talk about later. Now, the key thing is this. We take the engulfing bar candles high and the low, and we essentially map out the 50% of that prior candle's range. This will give us somewhat of a reference point to look for. Now, there's a lot more that we can do with this on the lower time frame, but just understand the concept. What we're looking for is the price to have an opening. Price on the next candle rallies up into near the 50% mark, and then we head lower to that DOL. Now, again, guys, this is going to be on the daily, the monthly, and the weekly time frames. I personally like to use it on these time frames. And the second methodology, we'll talk more about the 4 hour, the 1 hour, the M5, M15, if you want to go that low. It's going to be dependent on how you want to do it. But this is just method 1. This gives us directional bias accuracy with over 80% on the bullish and the bearish side. Now, let's go ahead. I'm actually going to take you guys through a few examples on TradingView. So here's a chart of NQ on the daily time frame. Now, as you guys can see, based off of the description of the engulfing bar, we have one that's printed here. Now, if you're wondering what this is essentially like the indicator that I have specifically just to plot out the engulfing bar and give me alerts across my watch list. But again, if you're more interested on that, check the public Telegram. I'll probably make a video on the indicator and post it somewhere in there. Now, the key thing that we have to understand, when the engulfing bar forms, what is the exact requirement? It must take out the prior bar's low in the bullish example, and we close above the opening price. Now we have the engulfing bar. Now look at the concept of the power of 3. And in this, I'm going to show you guys multiple different examples. But again, I want people to understand this one key component. This is just to give us the directional bias. I'll make other videos in terms of how to enter, but I want to show you guys how this can be used to create a very high probability daily bias. Now, the next candle opens up. We have the wick lower, so we have the power of 3. Now, these dividers in here, this is the 25%. So let me go ahead and mark this out for you guys. This is the 25%. This is the 50% mark in here. And this is the 75%. So the engulfing bar candles high. Again, this is going to be our DOL. So let's go ahead and map that out. And we know this is going to be our potential objective. Now look how the market drops lower inside of this overall area. And then we have a push higher. And we're going to see as we play it forward, beautiful. The market hits. That counts as a win. When now the indicator also plots across the board. So look at this bullish example. Price had a bullish engulfing because we swept the prior bars low. And we had a push back up above the opening price and a closure. Next thing we know, we have price comes up and we take out the high of the engulfing bar. This is an example of one that actually did not work, where there was a bullish engulfing bar. It's fine. It's not going to be 100%. When we play it further, we have another one right here, which plots out. We take out the prior bars low and we have a close above the opening price. Even though this candle was bullish, right? The opening price was here. So now what happens, price comes on the next candle, we take out the high. And even then, we still respect this 50% and we have a move higher. Here's another example. We have a bearish one in here. Price actually closes next to the 50%. What happens? Price comes down, takes the liquidity that's resting below that low. We have another one that forms. Price closes again near the 50% mark of the overall candle range. And we have a drop lower and actually drops even further to fill in this void. Again, guys, you guys can go ahead into your charts and actually test this for yourself. We have another bullish engulfing that forms. Then next candle, we have an opening price. Price rallies up, takes that liquidity. And this is the key component that I want people to really understand. I want to see the market open up. We have a drop lower first, and then we have the expansion to the candles high in this bullish example. So on the lower time frame, if it comes down to the 25%, 50%, we can use that to frame a bias. Now again, this video is not going to be just about entries because I have to build it. So this is going to become part of a series on the EBP. So again, make sure you guys are subscribed because I will be dropping, first of all, the method number 2 and how to enter these on a lower time frame using trading models and daily profiles. Now, we'll look at one more example in here. We have price takes out the bar low. We have a push above the opening price. Look how the next candle on the power of 3 comes down into the 25% and then has a push back above. It doesn't always have to go to the 50%, but as long as it's within this overall region, we're seeing price come down into this area and then have an expansion move higher. Here we have another example on the bear side, but this one actually we got a reaction, but we actually did not make a lower low. So this would count as a fail. We have another bullish example here. Price, see how price opens up. We come down to the 50% mark and then we have a push higher and we take out the candles high. This is how you can use this on the daily time frame, the weekly time frame, and the monthly time frame to determine a high probability DOL. Now guys, I'm going to make so much more videos on the engulfing bar play, and I'm going to add to this in terms of lower time frame entries and other components to it. This is just the beginning. So make sure that you're subscribed. Make sure that you join the public Telegram. I will post more educational content and PDFs inside of the Telegram. So you definitely want to stay up to date for every new video upload that I'll have, because this strategy alone can make you become a profitable trader.